I welcome you all happy investors once again back to this video where we are going to learn about exchange traded funds, that is ETFs, and everything, that is how it is different from mutual funds, how it is traded, how it is better than stocks, and what are the value changes of ETFs and in which stock exchange platform the ETFs are being traded, and what are the multiple types of ETFs in the market. A very good evening to you all. My name is Shubham Best and I welcome you all once again back to this amazing platform of YouTube named as Happiness Prime. This Stock 11 Prime video where we are going to learn about the multiple types of ETF. So first of all, let's start with what is an ETF. ETF is an exchange traded funds. Yes, exchange traded funds is a type of security which is used to track stocks, bunch of stocks, exchanges, you can say bonds, and you can also say as sectors, commodities, or multiple assets. Exchange traded funds is a type of security which is used to track multiple stocks at once. Just like an example you can take as SPDR S&P 500 ETF, that is known as PI. It is an ETF which tracks multiple stocks within S&P 500 index. So this is a ETF and all the ETF behaves like a stock, and those values of ETF changes throughout the trading day, and these ETFs are being traded on a stock exchange just like a normal stock. I hope you listen this very carefully. The values of ETFs, just like a normal stock, the values of ETF, that is exchange traded funds, changes throughout the entire trading day, and the ETFs, you can also bet your money just like in intraday in stocks. You can also put your money, you can also invest your money in ETFs, and the values of ETFs changes throughout the entire day, entire trading day, not entire day, entire trading day, just like the stocks. So you can also invest, and if you want to diversify your investments in different industries, in different sectors, in commodities, in bonds, in frequencies, you can just invest your money in ETF, that is exchange traded funds. Let me repeat it once again so you get to clarify it very carefully. A type of security which is used to track either a commodity or an index or a sector, or you can say an industry or multiple assets altogether. So ETF is just not targeting a simple stock, it is targeting a bunch of stock or an industry or a sector. So if you want to diversify your investments in different sectors, different commodities, different currencies, then you can buy an ETF and you can just diversify your investments. Now, how it is different from mutual funds? The values of mutual funds do not changes multiple times in a trading day. It changes after the trading day once in a day. And unlike mutual funds, ETFs are cost effective, are more cost effective, lesser expense ratio. The expensive ratio is less, more cost effective, and lower broker commissions. So these three are the major advantages of ETFs over mutual funds. That is, it is having low expense ratio, they are more cost effective, and third thing, which they are, I hope you are learning from this video. I hope you get to learn the best about the ETF, the definition of ETF, how it is different from the mutual funds, and how it is traded in the stock exchanges, just like Zerodha, just like these stock exchanges where we put our money, just like Grow is also a stock exchange. So these stock exchanges platforms, the ETF, are also traded just like stocks. Now let's learn about the types of ETF in the stock market. So first type, you can say the bonds ETF, just like government bonds, you can say state bonds, municipality bonds, local bonds. These are also the first type of ETF, that is completely focusing towards the bonds, the government bonds, local bonds, state bonds, just like this. So bond ETF is first type of ETF. Second ETF, you can say the currencies ETF, which is focusing towards the foreign currencies, just like Canadian currency, European dollars, US dollars. These are the ETFs which focus towards the foreign currencies. So you can also invest your money, and if the currencies goes up, then the value of these ETFs goes up and you can earn by that. So just by diversifying your investments. Second was currency ETF. Third, you can talk about sector oriented ETF. That is, you can say industry ETFs. Fourth, you can also name it as different sectors ETFs. I can give you example just like banking ETF. You can also take as energy, oils, and REITs, REITs investments. So these are all multiple types. Like you can say biotech. Biotech is also a sector oriented ETF. So these are bond ETF, currency ETFs, sector oriented ETFs. You can say fourth one, inverse ETF. Inverse ETF is a type of ETF where you are betting on the declining of a stock. You sell a stock, then you wait. Then you expect a decline in the value of a stock, and then you repurchase that stock. So the profit which you get, that is known as an inverse ETF. So you can also diversify your money in this kind of ETF. So these are the benefits of exchange traded funds. But you have to keep in mind that ETNs, exchange traded notes, is completely different from ETFs, that is exchange traded funds. ETNs are just like a stock and they are backed by an issuer, just like a bank. So ETNs are completely different from exchange traded funds. These are backed by an issuer, just like a bank. So we don't have to just go towards ETNs, and many companies are doing scams from the help of ETNs. You just have to stay away from it. A few examples of ETFs, as we already studied, SPDR S&P 500 ETF, which is a very popular example of S&P 500 index, which is used to track all the S&P 500 stocks. Second example of this is SPDR Dow Jones Industrial Averages. So this is also one of the popular ETFs examples. So I hope you got to learn the best about exchange traded funds from this video, and I hope you study the best about the value investing and you get to learn a lot from this channel. Keep learning, keep investing.